Okay, I think we'll get going. Good morning or good evening, depending where in the world you're based. And thanks so much for joining our webinar today. We run these webinars fairly consistently. Some of you may have been on some of our others. We kind of do a bit of a variety of topics, from generic process of investing into the UK from overseas. We do webinars about people that are living in the UK investing into the UK, and a variety of different options, from financing, tax advice. But today, and occasionally, we do webinars that are solely on one development that we are just launching. And today is our launch. This webinar is the official launch of this development, and it's something that we're really excited by. It's different to the norm of what we would typically offer, and what the industry would typically offer for investment. And yeah, it's something we're really proud of and really excited to share with everybody from Joseph Mews today. So if we go to the next slide, please. Yeah, firstly, sorry, there is a question and answer box below. So at the end of the webinar, I will answer some questions. So if you do have anything that you would like to ask, or that comes up either now or throughout the webinar, please do just pop that in the box, and I'll answer it at the end. So look, before we go into the actual project itself, we're going to talk a little bit about why UK property. What's the market doing at the moment? So if we go to the next slide, please. It's always important to sort of keep track on why the UK makes sense. And some of you I know are based in the UK, some of you are based overseas, but the same sort of rules apply. The UK is a resilient market. And I think, as I say, before we come on to the property or the project itself, it's important to look at the wider picture. And the UK as a market, as I said, is somewhere that you can rely on through resilience because of the fundamentals that it has. And the fundamentals in the UK are supply and demand imbalance. We do not have enough homes in the UK. We're a small island, millions of people, and a growing population, and we cannot build enough homes. We have some of the best education, if not the best education, in the world. We have some of the biggest commercial entities that are based and will always be based in the UK, providing, obviously opportunities and jobs and aspirations for people to go and work there. And so this is what allows the UK to tick on in this upward trend. And I think the last 10 years is a really good example of this, because over the last 10 years, everything that could have been thrown at the UK market was thrown at it. We had Brexit to kick things off in 2016. We then had inflation, we've had COVID, we've had interest rate hikes, we've had 7 prime ministers in 10 years. Everything that we could have done to ruin the property market, we've done. And yet, look at where the market is today. This is a generic performance. If we look at the likes of Manchester and Birmingham, Manchester in the last 10 years has grown 93%. Birmingham has grown 65%. So, London is really the only one that's felt some sort of effect from this, this instability. But that ability to have this resilience, I saw somebody describe it from Savills recently as the proverbial cockroach. They said, whatever you do to try and kill the UK property market or the UK housing market, you can't kill it. And that's reassuring when we're looking to invest in property, to know that I have this resilient asset that, as long as I don't need to sell, that I know that in 10, 12, 15 years time, it's going to be worth double what I paid for it. And that's why it makes such a good part of investment portfolios. It's something to put alongside other investments that is going to work for you, and to provide passive income for the future, for retirement, to provide legacy for your children and children's children. And it's secure. It's not a volatile market. It's a consistent market. And that's why we love it. Let's go to the next slide, please. So the housing crisis that we're all, I'm sure, have heard about and familiar with is probably worse than you may think. I mean, the government have told us that we need to build over 300,000 homes a year. They've told us this for the last however many years. But the last time we actually built 300,000 homes was in the 70s. So this is compounded. It's got worse and worse, and it is getting worse and worse each year. So what does that mean? Why is that relevant? Well, I know that one of the most important things for me, if I invest in real estate, is that if I'm taking a mortgage in particular, that I have somebody renting my property consistently, because I don't want to be putting my hand in my pocket and paying my mortgage every month. I want the renter to be paying that. And so the beauty of the UK, or the beauty of the housing undersupply, is that properties rent incredibly quickly. Void periods are relatively unheard of. That's nothing to do with us. That's just, and our properties, it's just the market. The BBC said recently there's 25 people viewing one home in the UK at the moment, which is crazy. And so, I look at my own personal experience. I don't think I've had an empty apartment for more than 3 days. And so, that means that you're constantly able to offset your debt through the rental of the property. So this is getting worse. It's going on and on and on, and it will do for the next for the many years to come, because we're not hitting our targets from construction. Next slide, please. So amidst all of the headlines that we can see of instability in the UK and everything going on, what's always important to look at is, where is the smart money going? Where is the investment from big funds and big entities going? And what we've seen since the beginning of 26 and even beyond is billions of pounds of investment from the likes of Blackstone, Legal & General, Lloyds Bank. All of these big firms are investing billions into the UK markets. So that says something, right? These countries have some of the biggest teams of experts, of data analysts, of people that are, their job is to figure out where to put their investors' money, and they are choosing the UK. We've got the Crown Estate, the royal family are investing into real estate. We've got funds building these apartments and homes. And why are they doing that? They're doing that because they know that this demand is so big and the supply is so low that they're constantly going to have a return from the rental. They're constantly going to be receiving that 4, 5, 6, 7% yield, depending on where they're building. So that's incredibly reassuring. If the smart money and these big analysts are putting billions of pounds and dollars into UK real estate, then, that tells us something. And that's why the next 10 years, amidst all the uncertainty for the real estate market, looks very good. Next slide, please. So we always like to understand, and this is something it's better to do on a one-to-one basis, and we always encourage to have a free consultation with one of our investment directors. But it's important to understand what drives your investment decision. And this property that we're going to be talking about today is one option, and there are various others, but it's important. What is it that you're looking to achieve? Is it what drives your decision? Is it entry price? Is it rental demand? Is it future growth? Or is it the energy efficiency of it? And there's no right or wrong answer, but if that's come up on your screen now, it'd be great if you could click one, because it would be interesting to see what the sort of thought process is. We sit with clients that want different things. Some people want, this is purely about cash flow. It's about income every month for retirement. Some clients want this to be a future tool for their children or for their retirement, but in the growth of the asset. And it's important to understand what that looks like. So, yeah, I think if we share those and we go on to the next slide, please. So rental demand, yeah, and look, we've just touched on this from my last slide about how important that is having a consistent rental. And the good news with the UK, as I say, is that no matter where you buy, you're always going to have that demand. What's important is that you buy quality, because even if the location is great, if the property itself doesn't stand the test of time, then you're going to be in trouble with being able to rent it down the line. So thank you for filling out that poll. Next slide, please. So how do you invest near a world-leading growth engine without paying the city centre premium? And this is what the developer and the partner has done incredibly well with this development. And if we go to the next slide, I'll run you through. So Cambridge, many of you will be familiar with. The Cambridgeshire growth corridor is what people are talking a lot about now. This development itself is in Cambridgeshire. It's not in the centre of Cambridge, and we'll come on to why that is. But just to pinpoint this on the map for those of you overseas that perhaps don't know exactly where it is, it's north of London, and it's in a beautiful part of the country. So if we go to the next slide. So this Cambridgeshire corridor, and we'll come on to why this is, but it's 34 billion pounds worth of GDV that this place performs at, which is huge, and it's for various reasons, which I'm going to come on to. But 34 billion is a massive amount that's contributing to the economy, and the reason is because of various jobs and various head offices that are based there. It's to do with the university. It's to do with the fact that it's a huge area for as a desirable area to live for a lot of people. And so we look at average prices. You're looking in the centre of Cambridge, you're looking at £362,000 as a an average price. Now, let's put that into context. If we look at Birmingham, the UK's second city by population, the average price is about £220,000. We look at Manchester, you're about £250,000. So the centre of Cambridge is very expensive because it's a beautiful area, it's an affluent area, and because of this big ability and an opportunity for jobs commercially within the area. What that means is that when you look at your yields, the more that you're spending on a property, typically, the lower your return is from a rental yield. That's why in the centre of London, if you buy a place for £1 million there, your rental yield, aka the rent that you're getting comparable to the price of the property, is going to be 2 to 3%. Whereas we're looking at, as the prices go down, that yield goes higher. So in the centre of Cambridge, the average yield is around 4%. But then we look at the wider Cambridgeshire market and you're looking up to 7%. And that's why we have chosen and they have chosen to choose this area that we're going to talk about today as their location. It feels the effects of this huge revenue that comes in. It feels the effects of all of the job demand, but you're not having to pay these huge prices. Next slide, please. So coming on to those businesses that I mentioned, the Cambridgeshire and Peterborough economy, as we said, it contributes 32 billion in annual output, and there's 431,000 people that's achieved by through these huge businesses. We have, and this is between the Peterborough and Cambridgeshire sort of corridor, which are about 20 miles away from each other. You have AstraZeneca, you have Amazon, you have Apple, you have Microsoft and Siemens. All of these names are names that we know, household names, and they are anchored there, which is what makes this so attractive from a rental point of view, is being able to live at in an affordable area in the beautiful countryside that have access to all of these jobs. And that's why we're so excited about this property when we come on to what the cost is for you versus what it would be in the centre of Cambridge. Next slide, please. So this is what I mean. The Cambridge Growth Corridor goes all the way down to the south of Oxfordshire, all the way up to Peterborough. If you can see there on your on the top of your screen in green, that's Peterborough, and then it goes the whole way. And the reason that's relevant is it's a wider contribution. This growth corridor has seen a huge amount of investment, £500 million to come in to change the infrastructure and make the connectivity between all these locations, between Oxford, between Milton Keynes, between Cambridge, between Peterborough, to make all of the connections better, and for all of these councils to sort of work together in that, provide more jobs, and to bring in more to deliver more investment. And so that's an exciting time. It's a really exciting time for this part of the country in terms of what they're achieving. And remember that if we're looking at this on the map, London is just below here. So the access to the capital as well from the likes of Cambridge and Peterborough, as well as, your Milton Keynes is very good. So this is, as I say, this is the right time and the right place. Again, connectivity, as I mentioned, from Cambridge, it's under 50 minutes to get from Cambridge to London King's Cross. So you're really well connected. You're connected well to different airports. There are 8 international ports and airports within a 2-hour drive. And this wider area within Cambridgeshire, that demand and that connectivity is what makes this so attractive. It's not just relying on one place and one company or one headquarter. This is relying on the wider region. And as that wider region becomes better connected through all of this investment going into the infrastructure, inevitably that becomes more popular. And another point to make here is that the UK, since COVID, many markets, everyone's back in the office, in the Middle East, in Dubai in particular, where I am at the moment, people are back in the office pretty much every day. In the UK, it's not the same. I'm from London myself, most of my friends are working from home at least a couple of days a week. So this necessity to be in city centres has really changed. People want space, they want security, they want the lifestyle element of being able to walk into the countryside to not be surrounded by people the whole time. That is more attractive now because it's possible, because you're not having to go in every day. You might only have to go in 1 or 2 times. So areas in beautiful countryside where you have more space, where you're paying less, are attractive to not just families, to young professionals as well. Next slide, please. So let's come on to this development itself. So Georgian Square is the name, and we'll show you exactly where the location is. But this is really exciting. And the reason it's so exciting is that, look, I've done this for 15 years, and we, typically from an investment point of view, city centre apartments have been the kind of bread and butter for this, and that's what we've continually done. We still do. We have properties all around the country, from Manchester to Birmingham to Derby to closer to London. What this is homes. So these are either semi-detached or standalone homes, 1 beds, 2 beds, 3 beds, and 4 beds. But the huge pull, and why we're so excited about this is going to be the first development of its kind, not just in the UK, in the whole world. And what I mean by that, this is going to be the largest development on the planet that is zero bills. So if we go to the next slide, this is a video that hopefully will play, and it will just give you a little bit of an overview before I go into more detail. Great. So that gives you an idea, a bit of an overview of some of the points we'll discuss, and then you can see the quality. Those real images of the development of the houses are from a development that this developer has done about 10 minutes away from this site. So if we go to the next slide, please. As I say, this is the first of its type. This is going to be the largest community in the world, as you saw in the video, that has zero bills. And it's in partnership, which we'll come on to, with Octopus Energy. Octopus Energy are the largest energy supplier in the UK. They're a household name in the UK. So for those of you based there, I'm sure you're well familiar, and even overseas, you may have heard of them. The technical details of the solar panels and everything we can share with you, but it's incredible. They're basically the houses are going to be energy hubs. So they provide their own energy, but all of the excess energy goes back to the grid. And so it's very cool. It's very efficient. It's exactly what the world needs at the moment. And from an investment point of view, well, what does that mean? Well, a huge demand, huge exposure. There's obviously going to be a lot of PR and press around the development itself. And also, it means that obviously you can charge more for rent, because if I'm saving on all of these bills, from electricity to water to Wi-Fi to, having an EV station outside my car, outside my house, these are huge savings. So the ability for rental charging is huge. And then also in the future, you buy one of these homes, when it's complete, how attractive is that for a family to buy a home where, particularly in a cost of living crisis, you don't have to pay any bills? So your exit strategy here down the line, knowing that you can sell to a family when it's complete, is really attractive. And there's not a lot of them. So we've only been given 50 units for investors. The rest are going to homeowners. So only 50 units to be able to buy from an investment angle. And the prices for the one beds, which are actually pretty big. I've been to the previous site and walked in through all of the different types of properties. And the one beds are big by UK standards, and they start at 174. You then go up to 240 for a two bed. And anyway, the prices are staggered, and they're also staggered in terms of when they complete. So there are 4 phases. So as you see here, it says phase complete Q4 2027. So 12 months, just over 12 months, the first one will be delivered. The next phase is 28. This phase 3 is 29, and phase 4 is 2030. What's the difference? Well, buying the payment plan is varied depending on when you're completing. So if I'm buying a property, a one bed that is completing in 2030, all I have to pay is 5% down, and then I pay as little as £750 a month for 54 months, and that will pay 30% of the property value. Now, when the property completes, I will then pay the other 70% via a mortgage. So all of them are fully mortgageable. You can imagine they're a dream for banks because of the risk element and because of all the due diligence. It's EPC rating A, which is I've never seen before. It's the most energy efficient property that you can possibly have. And so again, you have that opportunity to pay over a period of time. If you were to buy in the property that completed in 28, you'd be paying about £1,300 a month. So if you wanted to do that in quarters because you're based overseas and you want to put those together and pay, £4,000 a quarter, you can also do that. But the point is, the normal model in the UK is putting 20% down or 25% down bulk. Here, you can stagger it over time. So we obviously have specific payment plans for specific properties and individual units. So if you'd like to go through those, obviously we can do so separately. Next slide, please. So as I said, this explains it in a little bit more detail. Let's look at phase 1. So phase 1, you'll be putting your reservation fee down. You then make up the rest of the 5%, deduct the reservation fee, which would be £3,750. And then in this example, you're paying over 24 months. You're paying the other 25%. You've already paid 5% and you're splitting that. So that would be £1,823 per month. And then on completion, you're then paying the balance. Phase 2, if we look at that one, again, that if you look at the monthly payments, it's slightly lower because you're paying it obviously over a longer period, 33 months, and that works at 1,300. And then phase 3, and then phase 4, if we look at that, as I say, this is an example of a bigger one bed. You're paying £860 a month for 57 months, and then by the time of you complete, you've already paid 30%, and then you're just mortgaging the rest. And then the mortgage will be paid by the rental. And as we saw on the previous slide, the projections from what is renting at the moment in that area, bearing in mind that this is going to be a lot more attractive, this isn't going to have bills, you're already going to be achieving around a 7%. So it's, really, really attractive in that regard as well. Next slide, please. I mentioned Octopus Energy. This is a real big point. To be able to own a property that's partnered with the largest energy supplier in the UK is pretty cool. It is the world's first zero build homes of this size. It's guaranteed for 10 years. It's future-proof investment. It's obviously big rental appeal, sustainable by design. It's very cool, and it's something we're really proud to be a part of, because not only is it a great investment, but it's something that as I say, the world needs, and it's going to be a benefit for our environment as well. So as I said, if you wanted to go into the intricacies of how it works, it is pretty clever. But essentially, it is that, as I mentioned, the house is its own energy hub, and it creates enough energy to supply everything that you need. But then it also gives excess, which goes back to the grid. Next slide, please. So as I say, the EPC A positioning is a big a big thing. It's, for those of you familiar with EPC ratings, I'm sure that you probably haven't seen an A before, because I hadn't. And that is attractive, as I say, when it comes to mortgages, and just knowing that your home or your investment is so energy efficient is great. You have the solar generation, which are the solar panels on the roof and battery storage. You have the air source heat pump. Every development has the EV charging docks outside. Obviously, the UK, as a lot of places in the world, are encouraging electric vehicles now. So this is going to be a necessity. It's quite hard to implement that in apartments now, because of obvious reasons of space. So as this becomes more common, and we move away from, as we have, from diesel, and moving away from petrol over the years, these EV charging docks are really important, and they're expensive. So to be able to have one there is pretty cool. No home and energy bills, greater protection from energy price volatility, which is huge at the moment with the cost of living. And rental listing differentiator is a big point here. Imagine the estate agent is showing around a family or a young professional or a young couple. They're showing them around different houses, and they say, right, this one you pay bills as normal, this one you don't pay any bills. Which one are they going to choose? And that's why it's going to separate you. Property investment is always about having continued demand and having something unique. I always try and look for my own portfolio to try and find things that are unique, and this is certainly that. Not just in the UK, by the way, globally. So where is it located? So it's in a beautiful place called Wisbech. Wisbech is a lovely Georgian town. It's beautiful. Those of you that know it, I'm sure will know what I'm talking about when I say beautiful countryside, beautiful town. It's a lovely place, and it's only 22 miles to Cambridge. It's 20 miles to Peterborough, and then Norwich is 40 miles to the east. But around all of this area, the corridor between Peterborough and then down to Cambridge, is where all of these big businesses are. It's not about being in the centre of Cambridge. The businesses are outside; they're in the country. So because obviously they need big space, and so you're an easy commute. All of these houses obviously have parking spaces. Everybody that lives here is going to want to drive. When you want to commute and you want to get a train and you want to, walk everywhere, you live in a city centre. But for those people that are going to want to live here, they need a car. And, parking isn't that easy in the UK. All of these have allocated parking spaces that come as included with the property price, which again is not the norm. So you're 20 miles from Peterborough, 22 miles from Cambridge, but you're starting at £175,000, and you've got your own house with your own parking, with your own EV charging, with no bills. Whereas in Cambridge, in the centre, or even on the periphery, you're paying 370,000 for a one bed that's 500 square feet. And your yield is insignificant. So here you're bearing the fruits of all of the infrastructure changes and generation that's going on in the area, but you're not paying the price. And that's why it makes sense. You're close to all the jobs, you're an easy commute, you're in beautiful countryside, and you've got a zero bills property. So that's a really, really attractive investment case. Next slide. One of the big things that with the other development that's about 10 minutes away from this, and it's been so popular from rentals, that's not zero bills, that's not to the same standard as this, but it's been really popular from rental. And one of the big rental demand drivers has been the RAF base. So all of the agents said to us, they said, look, we have so many people that are based here. The US Army also have a base there. And it's 15 miles from Wisbech, and the other property has been rented by a lot of people that are working there because the accommodation is terrible, and for the RAF and for the army, and so they need homes to house a lot of the people that are working there, and so this is really attractive for them. So we know here that you're going to get long-term tenancies, and we know where they're coming from. It's not just your AstraZeneca, the Apple, the Amazon, all of these big companies, but also the RAF base is 3,600 just for RAF. And then you've got more from the US side as well. So this is great, and this is a big demand driver for this particular property as well. Next slide. So these are the houses. So there's different styles, and you'll see when we share details that there's semi-detached houses, there's standalone as we go through. As I said, there's one beds, there's two beds, there's three beds, and there's four beds. We have videos of all of them, and they're all different styles, different facades. They've tried to create, rather than these communities where everything looks exactly the same and it's a bit eerie, they've tried to sort of give them a bit more sort of a unique touch to each block, so that they're not just the standard. The finish is great. As I said, I've been to the complete project, which is a step behind where we're going to be with this, but They're beautiful, really good space, obviously really well finished, well designed, lots of light, and yeah, I was really, really impressed. For this price is remarkable, really, even forgetting the zero bills. So as I said, UK has changed as a demand for real estate because our working lives have changed. We want to be we have to be at home a little bit more. We want space, we want security, and we want the lifestyle element of being in the country rather than being in the hustle and bustle of the city centre all the time. So this fits to what the market wants. Next slide. So look, as I say, we are launching today. This is officially our launch. So if you want further details, and you're going to have a chance to book in a free consultation with one of the sales team who can give you access to the units. It is just first come, first serve on these, like always. The first person to reserve or put down the reservation fee is the one that secures any given unit. We do have a special offering today for our launch, and for those that have attended or attending, you get £1,000 towards either your legal fees or furniture pack for anything that you buy. So yeah, a little bit of a sweetener there for those of you that have taken the time to listen to me for the last 30 minutes. And look, just to finish on who we are, just for those of you that don't know, if you go to the next slide, we've been around for a while in different capacities, but always working with UK developers and providing clients both in the UK and overseas with the best options that we can find in the market. We've been a part of delivering over 4,000 units, 43 developments, 600 million GDV. And we have a big client repeat purchaser rate. So if you go to the next slide, I mean, the process of buying property, whether you're in the UK or not, is pretty daunting, because if I'm based, in the Middle East, or even if I'm based in the UK, but, hundreds of miles from the actual property, the process can be quite time consuming. So we handle everything. We introduce you to the lawyers to do the contracts at the beginning who are working for you. We do all of the customer care. So any questions on the mortgages, on the tax advice, how am I supposed to structure it? We do the rentals, the management, the after sales, everything is done through Joseph Mews. So whether you're based in New Zealand or you're based in London, the same rule applies. And so you have that peace of mind that you have one stop. It's contact Joseph Mews and we do everything and organize everything for you. So questions, how am I going to rent my property? Well, we're going to do it for you. It's all handled by us and managed by us. It goes a step further as well. We don't just sell a property and, goodbye and good luck. This is about building portfolios. We want our clients to build portfolios, to use one property to buy the second property, to set yourself up in the most efficient way. We do portfolio reviews every 12 months, and we let our clients know how their asset is performing and what changes you could make. Could you be asking for more rent? Should you be changing your tenant? All of these things, we're with you there every step. So yeah, that's the process. It's not just selling the property. It's managing all of the different boxes you have to tick across the journey, the customer journey. Next slide. And yeah, as I mentioned, 12-month portfolio reviews, rental appraisals, and tailored investment strategies. We know that not every property is right for every person. Some clients want more higher yield. Some people want properties that are complete. Some people want properties that are complete later because they want to pay the payment plans. It's not one shoe fits all. So our job is to give you the honest advice on what's going to be best for you. And maybe, in some cases, property isn't the best thing. We have clients that say they want to buy a property and they want to flip it in 5 years. Ironically, and maybe it could work with this Cambridge one, because obviously the value and the scarcity of it and what it has. But in general, the UK is a longer term market. It's not volatile, but it's steady, and you need to be in the market to appreciate the returns that you can get. Next slide. So yeah, so look, you're gonna have a poll here that should come up, and you have the opportunity to book a free consultation, to book a mortgage consultation, or if you're just exploring for now, obviously we won't get in touch, but you'll hear about webinars in the future. If you book the free consultation for either property or mortgage, they're they come hand in hand. So if you do want to sort of understand the units, what units are available, what prices they are, you want to have a chat with one of the sales guys to send you all of the information, then I'd click book a property consultation, and then the next step would be to have a mortgage consultation. 99% of our clients take mortgages, no matter where they're based, no matter what passport they hold, no matter where they're a resident. that's the model, and so we encourage everybody to have that conversation first, because otherwise you want to have full clarity. Even though this property you might buy in phase 3 that completes in 2029, it's still good for your peace of mind and your clarity to speak to a mortgage broker today to say, what are my options today? And then, as long as your circumstances don't change, that further down the line you're going to know roughly what they look like. So it's good to do that. It's a free consultation, and we arrange all of that for you. So I think, yeah, there's a Q&A session now. So please, I've got a few questions, but put in any questions as we go along now. I've got a few questions about the actual available units. And what I would say is, look, if you want to find out what exact units they are, rather than me going through all of them now, just book in a property consultation straight away after this webinar. Somebody will get in touch with you, and they will send you the available units and see what is most relevant to you. Question about the flexibility of the payments. You can be a bit more flexible. It doesn't just have to be 1,300 every month. You could sort of weight it more. As an example, I have a client that wants to purchase in one of these properties with payment plans, but they want to heavily weight it for the first year because they're retiring after 12 months. So they want to heavily weight it there and then pay less in the years after. So, you can be fairly, what's the word I'm looking for? Flexible with these payments. So questions about can you buy with loans? It depends. I mean, you can buy the property with a mortgage. So the loan from the mortgage will be up to 75%, typically. So one of the cool things about this is that when you pay because by completion you would have paid 30%. If you can get a mortgage of 75%, which most people can, you've got an extra 5% there. So that 5% can go towards stamp duty and your legal costs and all of that stuff. So that's quite a cool sort of little added benefit of this. Can you share floor plans? Yeah, we'll share after this. We'll share with you floor plans. We'll share with you the different sizes. There's a real variety. Some of the one beds are pretty big. They're 650 square feet, which for UK standards is large. In the UK, the average size of a one bed is 490 square feet or 48 square meters, whereas these are pretty big. And so, yeah, I'll share the floor plans and all the different types of houses and the different sizes of each property. Explain a little bit more about zero bills. Yeah, look, the zero bills is pretty self-explanatory, which is great. There's no sort of hidden rule here. All of your bills are powered by the property itself. So the water, the electricity, the Wi-Fi, everything is done via the hub that it has on the roof, which is generating energy. And so you don't pay any bills. So as typically, let's talk about as a renter. If I rent a property in the UK, we've moved in, I'm going to have to pay all of the bills. The landlord doesn't pay it. So if I'm the owner, let's say, and then Joe Bloggs is renting it, as the owner, I don't pay anything. I just pay, if there's a service charge in an apartment, I pay that. But the tenant is responsible to pay all of the bills. So the tenant has to pay water, they have to pay electricity, they have to pay the heating, they have to pay the Wi-Fi, they pay all of that. They have to pay council tax. As a landlord, you don't have to pay that. So why is that attractive from an investment point of view? As I said before, it's attractive because the saving that they're going to make, £200 a month at least, that can go towards the rental. So it demands higher rental for people that own in there. And also from the sale point of view, when you're able to sell a property that has zero bills, that's really something obviously incredibly attractive. And it's not just done with a random company that nobody's heard of. It's done with the UK's largest energy supplier, Octopus Energy. They are the biggest in the UK. They're a household name in the UK, and that should give you a lot of comfort. Council tax, to reiterate, council tax is not paid by the landlord. Council tax is paid by the person living in the property. The only time as a landlord you pay council tax is A, if you leave your property empty for more than 3 months, and B, if you decide to do short-term Airbnb style, then you pay council tax. But I mean, all of our clients typically do long-term lets, and so it's not your responsibility, it's the responsibility of the person renting the property to pay that. Can you share the brochure? Yeah, absolutely. We'll share details of the property. I'd suggest you book in a free consultation for one of the salespeople to share that with you. And yeah, you're also going to be sent a recording of this webinar as well. So to share with loved ones or your spouse or anybody else, you can do that. So yeah, I think I've answered most of these. Yeah, how are you going to rent them? Yeah, so again, the rental, everywhere that we build, we speak to the local agents. We do the appraisals from them. They're the ones that tell us how the other stuff's renting in that area, and then we coordinate all of that. So everything is done via us. As I said, the process, you need a lawyer at the beginning. You can use whoever you like. We have a panel that are based in the UK that we can refer to you. The mortgage, as I say, we put you in touch with. The rental, we manage all of that. The management, the furniture, if you want to furnish the properties, we do all of that as well. And yeah, so everything is provided. In terms of the solar export, in terms of earning from that, no, you don't earn from that. The benefit is that it's zero bills. The benefit for Octopus is that anything that is excess that you're not using goes back to the grid. And so, it's a benefit for them, which allows it to be a benefit for us as owners and as renters, which is pretty cool. I think that is it now, unless anybody wants to ask anything else. What I'd suggest is you book in a as I say, a consultation, and we can go into further detail with you individually, and you can understand what options you have, sizes, prices, availability, and all of that. So I want to thank everybody for their time. 45 minutes on your Thursday, really appreciate it. And yeah, as I say, if you've booked in a free consultation, somebody will be in touch and send you all of these details, and then we can go from there. But anything else you need, you've got our details. Please, please don't hesitate to ask. And I hope to hear from all of you soon. Thanks a lot, and have a good rest of your day.